Hey everyone, and welcome back to CryptoNinjas. I'm Daily, and today we're talking about Falcon Finance, the project behind the synthetic dollar USDF and its upcoming FF token sale on Buildpad. We will cover what Falcon is, how it works, how you can earn yields on Falcon Finance, why it might stand out, and of course, details of the token sale on Buildpad plus some price predictions. Let's dive in. But before we get into the video, make sure to like and subscribe to Crypto Ninjas and use our Binance referral code on the screen for 20% off of trading fees and up to $100 in new user bonus. Thank you very much. So first, what is Falcon Finance? Well, Falcon Finance is building what they called the first universal collateralization infrastructure, powering on-chain liquidity and yield. That basically means you can deposit different kinds of assets, for example, stablecoins like USDC, USDT, blue chip cryptos like Bitcoin or Ethereum, even tokenized real-world assets like US Treasuries, and mint a synthetic stablecoin called the USDF. After you mint the USDF token, you can stake it to create the SUSDF, which is a yield-bearing token that provides users with diversified institutional-grade trading strategies beyond a blue-chip basis spread arbitrage. Since launching, Falcon Finance have achieved quite some success. The USDF total supply at the moment is at about 1.62 billion tokens. And right now, there has been around almost $500 million in SUSDF token supplied to the network. So yeah, quite an impressive number with an average APY of about 9.17%. That is quite high if you compare it to similar protocols like Ethereum, for example. I think we're looking at about 7.8 or 8%. So if you're looking for an emerging place to put your stablecoins to work, then Falcon Finance could be one of the better places with a very high APY compared to some of the industry leaders. However, I also have to mention the fact that even though $1.6 billion in value seems high, it is, when it comes to the stablecoins market, still relatively modest. If you look at Tether, for example, they're sitting at about $170 billion in market cap, USDC 73 billion, and Ethereum, USDE, is sitting at about $13 billion in market cap. So that's about 10 times or like 9 times actually higher than that of USDF. So scroll down a little bit and you can see USDF right down here. And if you're skeptical about, whether they have all of these assets in their backing or not, then yeah, they also provide a transparency page where you can look at all of their reserves and protocol backing ratio. And keep in mind, this has been audited. Look at that, proof of reserves by HT.digital. So everything looks quite legit. And you can scroll down and you can see the reserves breakdown. Yeah, so they have quite a lot of assets. Bitcoin, they hold about 53.4% in Bitcoin, stablecoins 23%, and interestingly, about 6% in Doge. Now, personally, I am not a fan of these reserves that they have because to me, I think if you're dealing with stablecoins, especially algorithmic stablecoins, then you need to hold your asset or your own synthetic, stablecoin, reserve mostly in, liquid stablecoins. And so this percent should be at least 50%. So okay, you should hold your asset 50% at a minimum in liquid stablecoins. And for Bitcoin and Doge, I don't have any issues with Bitcoin. Bitcoin is an amazing asset, but I don't think that it should eat up or take up that much of a high portion in your portfolio. At the end of the day, Bitcoin is still a volatile asset. Even though it's the biggest one, it still can go down like 5-10%. I guess, if Bitcoin goes down like 10%, they can still eat that loss and the reserve would be still fine. But in case of a very volatile market and Bitcoin went down like 30%, then obviously that would affect the reserve backing of their own stablecoins. And when that happens, I mean, people are going to be panicked. They also have a bunch of other assets like Doge and Fed, TRX, Electron, Anton, Ethereum, which I'm going to explain why I think this happens. Like if you look at it, they have a bunch of these random tokens, which are worth like a few hundred to like few $1,000,000, quite a lot. But yeah, a bunch of these tokens that seemingly don't belong into a reserve holding of a stablecoin. But I'm going to explain why that happens and why this happens in a little bit. So to understand why that happens, we have to understand the mechanics of Falcon Finance. And so let's get into the part where we explain how Falcon Finance works. So if you click onto the website of Falcon Finance, then the dashboard would be the first place to show up. The next thing is you can click on transfer, right? So what transfer is basically you can deposit your assets to your Falcon account and mint the USDF stablecoin. But if you do this, this is pretty much like a legit way, a regulated way. So you have to verify your identity, whether you are an individual or you are a company, right? Institutions. Now you have to KYC, okay? And obviously, we don't want KYC. Okay, and if you don't want KYC, that's fine. There is another way for you to get the USDF token and start earning yields. And this is where, I'm going to explain why, they have a bunch of these random tokens in their assets reserves. And so if you click on this swap page, there are two tabs, okay? So mint and redeem. So if you want to mint the USDF token, you have three ways. You can buy on chain, or you can innovative mint, and you can classic mint. So what do these mean? For the buy on chain, basically you just swap your asset to USDF. So just basically swap, okay? Buy and sell. And remember, this is on Ethereum network, mainnet, okay? So make sure to have assets on Ethereum. So for example, I have a little bit of Ethereum in here. I can basically put in like $40, $50, and I can buy USDF on the open market. Okay, I can swap it. However, the crazy thing is you cannot swap it back. Okay, there is no option to swap it back. That's only one way. Now you can click onto the swap here, the arrow, and it will show you the redeem. So you can redeem. However, if you want to redeem, there is a minimum amount of about $10,000 USDF. So if you have less than that, you cannot redeem. So for me, for example, if I only like have $50 in USDF that I just swapped, what do I do now? Well, you can go to Uniswap. Okay, they do have a liquidity pool. So you can go to Uniswap and you can swap USDF back to Ethereum or to USDC. Okay, so that's not a problem. It's just a little bit of a hassle. Okay, I don't know why they don't have that. Probably for regulations or whatnot. But yeah, so you can swap to get USDF. The second way is you can do innovative mint. Now, this is why they have a bunch of these worth like random ass tokens. So if you click on innovative mint, and you can select pretty much any tokens that you want. This is a strength of Falcon Finance, where you can basically have any tokens and you can swap it to USDF. Okay, so you can have XRP, Trump meme coin, even BMAX, Sol, Polygon, Doge, Sui, and other tokens like Siren, which is a meme on BSC. However, when you choose the innovative mint, you have to lock your asset, and you cannot mint one-to-one. Okay, now for the buy on chain, if you have $1, you can swap it to one USDF. So it's one-to-one. But for innovative mint, then you actually have a ratio, okay, a min ratio. So let's say you put in BNB, okay, and you put in one BNB, which is supposed to be like $900, but you can only mint back about 80% of the value, which is 736 tokens. And you have to accept the lockup period of about 1 year. Now, you can also customize the risk and the return. So if you want the strike price to be like 150%, then yeah, you can do that. Or you can put on the liquidation lower at about 73%. So that means you can only get like 639 tokens back to you. But you're not going to be liquidated if a BNB price suddenly go down like in value, right? If you choose 80%, then if BNB price goes down to like $735, you're going to be liquidated, so your BNB is lost. You are now left with 736 USDF. You cannot swap it back. Okay, and you can also choose collateral lockup about 90, 180, and 365 days. The less time for the lockup, the less asset that you can mint. Okay, so yeah, you can just research about this, try everything, and let me know what you think. And this is why Falcon Finance has a bunch of these tokens in their reserves. Like they don't intentionally, purchase all of these tokens to back their stablecoins. No, I think what's happening is, people, they have all of these tokens and they mint it for USDF and they lock it in their smart contract for like a year, or 90 days or 180 days or whatever. That is why it's showing up on their balance sheet. You know what I mean? So that, after the lockup period ends, they're going to have these tokens there so that people can redeem it back. You know what I mean? So I think that's why they have all of this, because it would be absolutely insane for them to buy all of these tokens as reserves and manage all the different strategies that they do, like arbitrage and everything. And the third way to mint is the classic mint. Now, this is a little bit different to the innovative mint, where it's you can claim your collateral at any time with no lockup period. However, there is an OCR, which is the over collateralization ratio. So that means if you put in one Bitcoin, like which is worth like $116,000, there is an OCR buffer amount, which is equivalent to about zero point 0.2 Bitcoin. So they hold 20% of your Bitcoin as collateral. So you can only mint back like $92,000 or $93,000, which is equal to like zero point 0.8. Look at that, 0.8 Bitcoin, right? So they do have 20% of your Bitcoins back as over collateralization. If you want to redeem, very simple. You just redeem your USDF token to your preferred asset, but the minimum amount is 10,000, as I said, and there is a 7-day cooldown. So you're gonna receive your tokens after 7 days. So I think it's Ethereum settlement and everything. Okay, so after you have your USDF, what do? You can click on the earn part, and there are two ways for you to earn: the classic yield and the boosted yields. For the classic yield, you can receive basic yield with no lockup. You can unstake anytime or deposit to boosted yield vaults to boost your yield. So right now, the estimated APY is about 9.70%. Again, higher than industry standards, I guess. So yeah, if you have USDF, you can just put it in and you will receive SUSDF token, yield bearing token. And then if you want, you can unstake it to USDF. Very simple, straightforward. You only have to pay the network cost. Next is the boosted yield, which requires you to lock your USDF or SUSDF token, and you will receive a boosted returns with fixed tenure. So there is a different lockup period: 1 month, 3 month, 6-month lock, and 12-month lock, which gives you like 13.76% APY. The next thing is you can customize your profile and transaction history and everything. And the final part that I want to show is the Yap to Fly. This is with the partnership with Kaito. So you just have to connect your X account, post a lot about Falcon Finance, and you earn points, and you're gonna receive the airdrops when they launch. But because they were launching very soon, I think if you do this right now, you would be late. However, they do, I think, have like season 2 or season 3 airdrop. So you never know. Maybe wait until the season 2 is announced and then start, joining them and start yapping. But yeah, for now, it's I think after December, they're gonna launch the token in October or something like that. You can also earn the miles. So what this miles is the points, also for their airdrop. Again, I think if you're doing this now, you're pretty late. So they have bronze, silver, gold, diamond, and legendary tier. For the bronze, quite simple: buy $100 of USDF on chain. Silver, 500. Now, when it gets to the gold, it's a little bit tricky, like 1,000, and you have to do all of this stuff, like get to 100 million miles or mint at least 10,000 USDF using stablecoins, the classic mint. Again, for whales, if you want to get into the gold. And then you can complete all of these missions to earn the boosted rewards. I see a lot of people having billions and billions of points. Look at the leaderboard. Look at that. At the top has 54 billion points. Insane, honestly. So, and they're launching soon, so it will be quite late. Again, wait for their season 2. Now let's talk about how they actually generate these awesome yields for people, because again, it's much higher than industry standards. Okay, 9%. And 13% if you lock your asset for a year. So how do they do it? They have several strategies, 5 at the moment, that provide yield. So first is the positive funding rate arbitrage, and Falcon captures positive funding rate arbitrage by maintaining spot positions while shorting corresponding perpetual futures. The spot assets are concurrently staked, generating additional yields alongside funding rate income. So it's pretty much hedging, neutral delta neutral strategy, just like Ethereum. They also have negative funding rate arbitrage. So conversely, Falcon can sell spot holdings and long futures to generate a yield with negative funding rates. So they doing it, in the opposite way. I don't think Ethereum has this yet, but I'm gonna have to check. This can be quite hard to also manage as well. Then they also have cross exchange price arbitrage. Now, Falcon buys and sells assets across multiple markets to profit from differences in their prices. And then they also have native altcoin staking, which Falcon leverages native staking opportunities for supported non-stablecoin assets, allowing the protocol to earn higher on-chain yields as part of its diversified strategy. And then there's also a liquidity pools where Falcon deploys a portion of assets into tier 1 on-chain liquidity pools to generate yields through on-chain DEX activities and arbitrage. And that's pretty much it, man. Like, it's all about, risk and rewards, right? If you want protocols that, give you higher yields for your stablecoins, like 9%, and, 13% if you lock it in for 1 year, then yeah, go with Falcon Finance. But you have to accept that the risk is much higher because they do have a lot of the strategies that they have to manage, and they put their money into DeFi protocols which are subjected to smart contract risk, right? Or you can put your money onto Ethereum, again, the top markets right now for synthetic stablecoins and yields, and they earn you about an average yield of about 7 to 8%, which is not as high, but it's stable because their strategy is nothing too crazy and hard to manage. It's only delta neutral. So yeah, less risk, less rewards. Finally, let's talk about the Falcon Finance FF community sale on Buildpad. Now, this is the part where I'm the most interested because I participated in 2 Buildpad sales so far, and it seems like they're going fine. If the Lombard one, it hasn't been live yet, so I'm waiting for it, but it seems like everything is going just fine. About FF token, first let's talk about what's the community sale on Buildpad size is. So the sale size is $4 million, so they only accept $4 million. The accepted token is USD1, ERC20, or BEP20, so on BNB as well. They're going to give you unlock 100%, which is good. Contribution range is about $50 to $4,000, and max cap is $5,175,000 for eligible participants. This sale uses a 2-tier structure. The first tier, which is tier 1 at $350 million in FTV, qualified by locking $3,000 or more in USDF token or SUSDF in boosted yield minimum 1 month before September 19th, 12 p.m. UTC. So, you can have a cap of $4,000. If you lock for 3, 6, 12 months, then your cap is now $4,500. So contribution range from $4,000 to $4,500 if you lock it for 3, 12 months with your $3,000. Additionally, if you have 5 million Falcon miles, you have a 15% boost. Now, for the average participant, then you're going to have to buy at $450 million in FTV. That is about 22% higher than the price that you purchase at tier 1. That's insane. From my own experience participating in Sahara AI and Lombard token sale, if you put in like $4,000 into these 2 sales, you get like $250 to like $350 in allocation, right? For Falcon, I think you will receive a similar amount. If you put in $4,000, you can expect like $250 to $300 worth of token that you can purchase. Finally, let's talk about the price prediction of FF token. First, let's talk about the fundraising. So they raised about $10 million from World Liberty Financial. Yeah, from the Trump family. Obviously, it's not an insane amount when it comes to synthetic stablecoins. If you look at Ethereum, for example, then they raised, I believe, $136 million. So I don't think they can compete with Ethereum at the moment, but they are getting there, right? So Ethereum is at about like $11 billion or $12 billion in FTV. And their stablecoin is at about $12 or $13 billion in FTV, right? So I think what's happening with Falcon is right now $1.6 billion in FTV for their stablecoins. I think that the FTV at launch of Falcon Finance could be at around $1.1 to $1.2 billion. Okay, so around a little bit less than just their stablecoins value, but it's going to be more than $1 billion. And that's it for this video. Thank you so much for watching. To wrap it up, Falcon Finance, I think, is a great launch on Buildpad. They've received an insane amount of success. Their stablecoin USDF is growing every day, and as the adoption grows, so is the value of the FF token. Their token is about to launch on Buildpad very soon. Make sure to participate and do your KYC and everything to be eligible. So good luck. Like, subscribe to CryptoNinjas if you found this video helpful, and use our Binance referral link for 20% off of our trading fees. and I'll see you in another video. Thank you very much. Daily out.